Hold on to your wallets. US stocks took a big hit on Monday as fears of a looming economic slowdown swept across the markets. Investors were rattled after President Donald Trump hinted that his tariffs could trigger a recession, adding fuel to the fire of growing concerns about the future of the economy. At the close of trading, the Nasdaq tumbled a whopping 4.0%, marking its largest one-day drop since 2022. Other major indexes were also in the red, with the S&P 500 slipping 2.7% and the Dow Jones dropping 2.1%. Tech stocks were especially hard hit, with Tesla plummeting 15.4% and chipmaker Nvidia down more than 5%. In fact, Tesla lost more than $125 billion in value in one day. Other tech giants like Meta, Amazon, and Alphabet didn't fare much better. So what sparked the sell-off? It all started with a comment from President Trump. In a recent Fox News interview, Trump addressed the possibility of a recession, acknowledging that the US economy is in a period of transition. When asked about concerns over a potential downturn, Trump didn't exactly reassure investors. He said, "I hate to predict things like that. There's a period of transition because what we are doing is very big. We are bringing wealth back to America. That's a big thing." Despite POTUS's more cautious tone, his remarks set off a wave of nervousness across the Wall Street. Investors are particularly spooked by the tariffs Trump imposed on China, Mexico, and Canada. These tariffs, especially taxes on goods entering the United States, could raise prices and slow down growth, especially in industries like tech and manufacturing. Tech stocks, which have been some of the biggest beneficiaries of the US economic boom, were hit the hardest. The magnificent seven of tech, that is Alphabet, Amazon, Apple, Meta, Microsoft, Nvidia, and Tesla, all saw red on Monday, contributing significantly to the market's drop. Tesla's steep plunge is largely tied to uncertainty around the tariff situation. Canada and Mexico, key markets for car parts, could face higher costs due to the tariffs, pushing up production costs for companies like Tesla. This in turn could hurt their profit margins and slow down growth. Despite the gloomy outlook, not everyone is ready to throw in the towel. Kevin Hassett, an economic advisor to Trump, is still optimistic about the US economy's future. Speaking to CNBC, Hassett argued the tariffs are actually bringing manufacturing and jobs back to US, which could be a positive long-term outcome. But analysts are not so sure. There's growing concern that the tariff policies could lead to higher prices for consumers, putting a strain on household budgets and slowing economic growth. With US markets falling back to levels seen before Trump's election victory, investors are beginning to wonder if the hopes of tax cuts and lighter regulations that initially drove optimism have started to fade. After all, as one White House official noted after Monday's market close, there seems to be a disconnect between the stock market's animal spirits and what's actually happening in businesses and with business leaders. For now, the battle between investor optimism and economic reality continues, with the tariffs sitting squarely at the center of it all. Looks like we are in for a bumpy ride. For more updates on US tariffs and of course on the so-called Trump's hints at recession, stay tuned to the official YouTube channel of the Indian Express.